Hi everyone. Today I wanted to highlight some of the jobs data that we got last week, talk about how job openings did reaccelerate a little bit, the unemployment rate did stay flat, but of course we will also look at all of the rest of the data that we normally look at for the weekend videos, those longer term charts to see where we could be headed over the next couple weeks, but also couple months. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So US jobs did have a little bit of a rebound in April. Job openings actually ticked up a little bit, even as the worries ticked slightly higher, right? So we were talking about on the channel how we were definitely concerned that the job openings could be weakening. The unemployment rate might step up. We did see the ADP non-farms also see a little bit of weakness, but then we ended up getting fine data on the Friday. Is it fake data? That is always the question mark. If we see that number tick up, I think everybody generally knows that markets are going to panic, and I think that's part of why we are seeing good data. But besides that, you can see employers posted 7.4 million job openings, 7.2 in March. Bump came from the private sector, things like healthcare and business. So overall, why do we care? If we're starting to see a reacceleration in hiring, reacceleration in job openings, that could be a nice move for the economy, something that says we're probably not going to see a cooling in markets, not going to see a collapse. You also have to think about things like the current deportation rate that's happening from the government perspective, right? We have a president who is trying to actually attack the illegal immigration problem, and now we are starting to see some of those job openings come on the market. I do think that's another driver that we have to consider. But at the same time, if we do see the job market start to get a little bit too hot, we could see inflation potentially return. I don't necessarily see that happening, and obviously there's no evidence of that, definitely none in the short term. This would take many months to kind of play out, but it's not something that we should ignore. And just as a counterpoint here, I did also want to highlight that services did contract in May. We did see the service sector unexpectedly shrink last month, first time in nearly a year. So not everything is rosy, despite the jobs data being pretty good. ISM services dropped below that 50 mark. The 50 mark separates growth from contraction. We've talked about that many times on the channel, but the services did step below 50, something we have not seen since 2022. So we are seeing a mix of weaker demand, rising input costs, unsettling picture for the economy. That's kind of that geopolitical risk. And then this also highlights what I talked about before, right? We had the ADP job openings come in at just 37,000, way lower than expectations, which could signal a soft patch for markets, soft patch for the economy. But at the same time, we saw JOLTS job openings be a little bit better. Unemployment rate did not tick any higher. So again, mixed data, but this is not something that we should throw away either. Services, this is a service economy, and it did contract just a little bit. Moving over to fear and greed, we did have a little bit of a choppy week. We were starting around 61. We dipped down to 58, a little bit lower, 55. And then we had a push back up to 63. You can see the chop here on that momentum. Momentum did step up finally into regular fear, out of extreme fear. It's been there for a long time. Now strength in regular greed, breadth, still extreme greed, but starting to trail off here. We've been talking about that. And we'll take a look at it later on the charts. Put call ratio also starting to elevate here just a little bit, coming off of that critical low level around 0.65 to 0.63. That is just about as low as it goes. Volatility also at a very low level, probably has room for about one more move down, but we'll see. And then safe haven demand, still extreme greed, still elevated here over the last 20 days. And then you can see junk bonds also elevated a little bit, but still in regular greed. Moving over to the AAII survey, you can see we were completely flat from the previous week. Very little movement, just continuing to kind of melt higher at this kind of historical average. Not quite there. You can see the bears are not at the historical average. Neutral also below, and the bears are a little bit above. So maybe that's why we're still kind of melting higher. We don't have that extreme bullish read, but we did have a pretty decent size one, and now we're still kind of flatlined here over the last 2 weeks. So we'll see if this continues to trend lower. My expectation was this was going to step down and we are going to see a little bit of bearishness this week, but didn't quite work out that way. We did get a couple of spikes down, but slowly grinded higher through the week. Moving over to seasonality here, you can see seasonality supposed to be relatively bearish here towards the middle to kind of last quarter of the month. We're right here, 6th to the 9th. That is just about the kind of peak weekend, and then it's down trending here through the end of the month. Pretty much up until the 24th is your kind of peak low level, and then it flattens out. Sometimes you get a little bit of a spike up towards the end of the month, but relatively speaking, this is quite bearish from here up until the 24th, so about 2 weeks, almost 3 weeks of bearishness. And then looking at the seasonal calendar here, you can see bullish for the Monday, bearish Tuesday, Wednesday, really very little data. You do get CPI on Wednesday, Treasury budget, not expecting a whole lot out of that. And you can see quite a bit of terrible numbers here for June, down 10%, 8.6%, NASDAQ 9%, June of 2002, 9.4% down. So this is towards the end of the NASDAQ's best 8 months, and that seems to be true for now. I do think we're kind of at a peak level, and then don't forget the following week is the start of your quad witching week. Looking at the economic calendar, Atlanta Fed GDP for Q2, that stepped down a little bit from what the previous expectation was, so we'll see if that follows through. 3-year note auction on the Tuesday, and then Wednesday, this is really the biggest one for the week. CPI data expected to be pretty marginal to the upside, 2.3% for the year over year. Core number, 2.8%. Don't have the forecast yet. That'll come out through the week. 10-year note auction also in here, 4.3 was the previous Thursday. PPI core and headline, not expecting much out of that. 30-year bond auction all the way up almost at 5%. My expectation is that'll probably continue to steepen here a little bit. And then looking at Friday, just Michigan inflation data, nothing really. So CPI, that's the big one, and that is on Wednesday. Moving over to Max Pain here, you can see stock price $5.99, Max Pain $5.90, current options 400,000, put call ratio 1.9. So relatively speaking, this is not giving a ton of room to the downside. You can see that first kind of put wall there at 585, so that's a fair amount, about 3% lower from current price. 585, maybe as low as 590 makes sense, about 2% lower. So there is a little bit of room to fall, and then 600 right at that call wall. That's pretty much right where we are now, so that would indicate not a ton of room to rally this week based on the Max Pain expiration. Moving over to the charts, looking at the SPX here on the weekly chart, 1.5% for the week. Did get back above that trend line here. We touched it 12 May week, rejected from there, couldn't get above it again, and now we're back above it. Are we going to be able to hold that level? Momentum still a little bit bullish, RSI still a little bit bullish on the weekly chart, but we are right into the middle of this consolidation range here. You got the high back at 61.28 potentially. That would take you right to this trend. If we did get a push to that trend, that would take us to all-time highs, and then we're going to see if this is a major double top, then there is a lot of downside to come, right? Because you have one high here, you get a second high, this would be your midpoint, and that would give you a much lower price target, potentially as low as this kind of 4,000 to 4,500 range, I think would make sense. We still haven't technically touched that 200 SMA on the weekly chart or even the 144 EMA. If we came down and touched the trend line, that would be close to 5,000. Once again, in my opinion, I just don't believe that there's really anything driving us to higher valuations, especially with all of the geopolitical risk. We're not exactly getting rate cuts. The jobs market is still okay. Earnings was mediocre. So we'll see. We'll see if there's anything that can really push us to these prices. And honestly, I just feel like the market is expensive at this point, but we'll see. And then looking at that daily chart, just as a reminder, we still have this kind of rising wedge pattern on the daily chart. Current support 597.63. That is kind of the consolidation low of this choppy range above this here. And then you can see if we did get through there, that would take you to that all-time high level around the 610 area. So that is what we're looking for. 604.54 is the current resistance. Moving over to the Tasty charts here, you can see we did get finally above that ATR trailing stop. 594.85 was that level. We did get above it, so we're bullish conditions now, back to a trailing stop around 521.22. We'll see if that continues. Your next level would be that second ATR band around 526.38. That would take you past the all-time highs. We're right at the first one. Maybe that's the target where we do see a little bit of resistance. It's been a little while since we've been there. You can see the last time we touched that first ATR band to the upside was back here at the peaks, 19 February week, 17 February week. We touched that level and then rejected from there, obviously down to the 144. So we'll see. That is another interesting zone to continue to watch, and that is where we finished for the end of the week. And then looking at that daily chart, continuing to melt up on this 8 EMA, very little volume through this rally. That is concerning, right? So we had tons and tons of volume at the pivot point coming through at these lows, got really strong rallies off of it. Makes sense why we've had such a nice little follow through off of that. Still bullish conditions, trailing stop 575.29. We're right at that second ATR band. The upper band would be 509. 68. So everything across the board here now is bullish based on these charts. Moving over to the NASDAQ here on the weekly chart, up about 2% or so on the week. Momentum bullish, RSI still bullish here. Still looking for that next trend around 22,336 if we are going to continue this rally here, and that would take you to the all-time highs, pretty much right in that zone, just slightly above. And then we'll see what happens after that. Is this going to be a very slightly higher high? We take out the wicks, take out those trailing stops, and then we see a rejection from the zone, pull back to that next trend line down here, potentially around the 19,000 area. Obviously, it's not going to be straight up, and I do not expect that. The big concern here is that it's just a first drop. We come back and retest powerfully, and then we get kind of a continuation lower like we did from here in 2021 all the way through to October of 22. Is that what we're going to get? I don't think it's impossible. We're not quite at those levels that would take you to this trend line up here. Before we saw that happen, 26,500, that's a possibility. But of course, we have this intermediate level that we have to continue to watch, which for next week is going to be around that 22,385. And then jumping back down to that daily chart, we still have this kind of rising wedge structure as we rally closer to that all-time high, and that's part of why I'm so concerned about that zone. I think we'll probably get a touch of the level, but I just don't expect that we're going to get a higher high. You can see we've been relatively flat for a long time here on the NASDAQ, got all the way up to around this kind of 500 level, pulled back to 433, rallied up to a slightly higher high, and then we had a double top, pulled back to that same low back here, actually overthrew it just a little bit, and now we're back to this double top. So is this going to be just a wide-ranging sideways chop? I think that is probably the most likely case, at least for now. Like I said before, I just don't expect these companies to be worth more, at least in the short term. But also, I don't think there's a major reason that they go to, say, half of their current value by any means. Moving over to the Tasty charts here for the NASDAQ, we took out that trailing stop last week, a couple of weeks ago, and now we're rallying through that first ATR band. The next ATR band target would be that kind of 551 area on the weekly chart, continues to step up pretty aggressively. That would take you through the all-time highs here around that 538, 539 area, and then to that trailing stop back here, which was around 547 before we got that pretty aggressive step down here. And then you had a flat trailing stop while we kind of chopped around in here. And based on this, we are still rallying through off of these bullish conditions. And then looking at that daily chart here, you can see grinding up that 8 EMA, continues to be a relatively strong melt up. And then looking for that upper ATR band if we can get it around 540. But again, you still have this kind of rising wedge pattern. And we did have a fair amount of relative weakness towards the end of the week, which I am concerned about as we head into next week. Moving over to the Russell here, you can see the Russell did have a really powerful week. Most of that was on the Friday, up 3.3%, really strong. Obviously well off of its all-time highs, which it had back here in November. And we're still even well off of those year-to-date gains, potentially back here in December to January. We were right around this kind of 220 level. So we have about another $10 to go if we're going to get to that break even on the year. Can it happen? Absolutely. You still have that 55 EMA in here around 213.97, and then my level there 214.79. We finished right at the level 211.88. We did finish above it by about 2 cents, but I would call that a touch here, right to the high from this 25 March peak. But that did carry us through finally from that March of this year peak. And then you're kind of through this kind of consolidation low back here. So the trend line slightly above it, 215.79. Again, this does look relatively bullish overall, but it has been relatively weak compared to the SPY and the NASDAQ. But this week it did outperform, which makes sense. The NASDAQ usually leads us higher, SPY follows, and then the Russell's kind of last in line. But now you have the NASDAQ kind of faltering, the SPY still trailing to the upside, and then the Russell getting this kind of pump here through to this 200 SMA zone, the 144 EMA zone. So 214 to kind of 215, the trend line, all of this consolidation zone. I think we'll get a push to here, and then we'll see if we're going to have that true momentum to the upside, or if this is the zone where the bears are going to step back in and start to drive the price back down into this 200 areas where I think we'll go. Moving over to the Tasty charts here, you can see push through all those EMAs and SMAs on the weekly, so we are back into bullish based on that metric, but your trailing stop is still here around 223.09, pretty much in line with what we talked about, 222, 223, somewhere in here makes sense. That takes you to this consolidation high, still well off of this most recent high, but still technically bullish, momentum bullish, RSI bullish, of good volume on the week as well. And then looking at that daily chart here, you can see again through that 144 EMA, nice acceleration through there. All the EMAs and SMAs are starting to trend a little bit higher. Bullish conditions, trailing stop 201.17, looking for that upper band as your target. Again, in that same region, 217, which is just a little bit short of the previous target, but generally in line with that zone. Moving over to the Dow here on the weekly, similar to the Russell, but not as powerful. 1.3% to the upside, momentum bullish, RSI bullish through these EMAs and SMAs. Looking at that next level, 432.78 is your resistance, and then above that you got your peaks here around 445.16. So it took a while. We finally got above 426.20, and everything still looks relatively bullish here on the Dow, despite this hesitation and now the breakout here. Moving over here to the equal weighted S&Ps, you can see we've had another decent week, but not above that next level. 179.94 is that next level. That was the peak back here from the 12 May week, and then we touched that level again and then pulled back, and we have not recovered all of those gains yet. Again, tech led us higher, and the equal weighted S&Ps are not being led higher as much. The rest of markets tend to lag, and that is what we're seeing right now. Moving over to the ratios, looking at the SPY Russell and NASDAQ SPY, you can see we finally got a little bit of Russell outperformance. That was part of the expectation. I thought maybe we went to this next level, but then we did get a little bit of a pullback there. So right now, Russell outperformance, and you can see the NASDAQ outperformed the SPY as well a little bit, but not by much. So your Russell was the best performer on the week. Momentum bearish there, RSI bearish there as well. So the Russell seems like the place to be, at least for now. And then the NASDAQ throwing another wick to this kind of peak back here. 16 December was that peak. Most recent, and now we've touched that level 2 weeks in a row, and it seems like we are going to get a little bit of a rejection from there. We are above the trend line. That's interesting. The next level is 366. That is the peak from back here as well, July of last year, before we saw a major rejection and some major NASDAQ underperformance. Moving over to the Mag 7 here, we did get up to that 315.04 level. Once again, threw a big wick to it and then still could not close above it. Momentum still bullish, RSI still bullish. This is 2 weeks in a row of touching this level. And looking at it here on the daily chart, I just want to highlight just how strong this resistance has been. Even with the NVDA earnings and everything, we touched this level multiple times, still cannot seem to get above it. This is the consolidation low from this choppy range back from December of 24 up until the breakdown in February. And we're here once again, still establishing a lower high. And I just don't think we're going to get through it. We've thrown a bunch of wicks. We've had every reason to get above it. And right now the momentum is bearish and RSI is bearish. Moving over to Apple and Microsoft, you got Apple up about 1.5% right here to this trend line, right here to VWAP. Just can't seem to get above here. And you can see the kind of triangle pattern that's been happening for a while. We did get above the SMA on the RSI, so that's a little interesting. Is this structure going to hold in here? It's not impossible, but still very much a downtrend. I just really don't see any catalysts that can propel Apple back to where it was. So this is likely dead money in this area. Can it go higher? Sure. If it does, I would absolutely sell it. And then looking at Microsoft, they had massive earnings and they have been able to continue that rally. Super aggressive over the last couple weeks. We're back at all-time highs, back above that level here, 466.57, and you can see over 2% on the week. Just continues to be straight up every single week. The momentum still bullish, RSI not quite overbought yet, but getting close. Moving over to Tesla and NVIDIA, very different stories on these here. You got Tesla down almost 15% on the White House squabbling, but we've talked about this before. You can see breakdown, consolidation, retest, breakdown from the retest. Is this going to be sideways choppy to bearish? Are we going to come down here and test the level in here around 200? I think that's absolutely a possibility. Momentum back to bearish, RSI pulling back to the SMA on huge volume. I would expect more bearishness to come. Right now, resistance is 301.93. Support is 280.06. And then looking at NVIDIA on the weekly chart, this still looks like a topping pattern to me. Still looks like a head and shoulders, left shoulder, head, right shoulder. If this is truly a right shoulder here, we should be rejecting pretty soon. This should be around the peak of that left shoulder, which was that 140.76 level. So this needs to sell here soon if it's going to do it. Otherwise, if it pushes through, then that would be a change of structure for NVIDIA. But right now, we're still watching this as a topping pattern. Either way, I still just don't believe this can go too much higher. The earnings was okay, and it did managed to keep it in this same price range, but it wasn't phenomenal enough to continue to push NVIDIA higher to new highs. It's been strong. It's above the level. Your resistance right now, 149.65. But if we get back below the 140.76 level and we start to see this as a right shoulder, watch out below because this could absolutely go back into the 90 to 95 range, which is that neckline. Moving over to Amazon and Alphabet, similar thesis on these two. NVIDIA, we've been talking about this for a while, kind of left shoulder head, right shoulder forming. We're a little bit above that left shoulder, so maybe it's a bit canted here, but your neckline's around this 160 to 164 area. This should be reversing here soon around 212.25. Otherwise, if it can hold this level, then 233 is the Amazon high. Talked about Amazon having a pretty good week and pretty good Friday, but we're still not above the high from 4 weeks ago. So we're right in this zone where it rejected last time, right in this kind of zone here as well from the October-November timeframe of 24. And then looking Alphabet, you got a nice push here as well, about 1.2%. Still not above any of these consolidation highs, and this looks like it's canted in the other direction, right? So you have a left shoulder head, right shoulder here, looking for this to sell back down to the neckline around that 144 area. Moving over to Meta and Broadcom. Meta had a great week, 7.76%, absolutely massive. You can see the pullback here, relatively shallow, big continuation. Are we going to get a higher high? Still potentially possible. Really don't have a whole lot of levels to work with, a lot, except for that previous high around 735, 736 in there. Momentum bullish, RSI bullish, clear divergence. You can see really high RSI read at that previous peak at a 76.56. Very close on price, and the current RSI is a 62. So something to consider there. And then looking at Broadcom, this was a new all-time high wick, but we did not close above the wicks of these previous weeks back here from the middle of December timeframe. So interesting on that. Can it still hold initial test and then continuation back to this 280 area? I think that is absolutely a possibility, something to consider, but the big wick rejection is definitely concerning. Momentum still bullish, RSI still bullish. Moving over to staples and discretionaries, these really haven't given us a ton of information here recently. Staples has been locked in for about a year and a half in this same trading range, really giving us very little movement. It had a really strong run here from October of 23 up until the peak of September of 24, but since then it's been basically dead money, which is interesting. Not seeing any pushes here, looking for a flight to safety by any means, but we're also not cratering, looking for that risk on style move. Definitely just a kind of hesitation here over the last basically year. And then looking at discretionaries, this has shown flashes of weakness. You can see clear peak here, high, lower high, big sell to that 200, touched the 200, bounced. Looks like a lower high setup for me. Clear consolidation 4 weeks in a row. Can't seem to get above 215. Can't seem to get to these trend lines anymore either. If this breaks from there, that's obviously going to be quite bearish. The momentum hasn't gone with it quite yet, but definitely something to watch for next week. I think we could absolutely get that breakdown in the step towards bearish momentum next week. Moving over to Breadth here, 20 and 50-day Breadth had pretty good weeks. 20-day was pretty bullish, up about 5% on the week after going to a new relative low, but we're still in the middle of this kind of consolidation, kind of no man's land, right? So we came off of a peak, got the little bit of a sell. We haven't kind of sold to a level where you can start to buy with both hands yet, but we're not cratering quite yet either. So you're in no man's land, waiting to see some clear direction on Breadth. Same here on 50-day. We're not at the peaks that we were 2 or 3 weeks ago. Momentum is still slightly bullish. Can't seem to get back to that 77.46 level, kind of in the middle of the range. Probably looking for a little bit of a sell. That's what I've been saying for a bit now, but for 4 weeks we've been basically flat. Moving over to 200-day Breadth, you can see we did get a slightly bullish candle as well, but still very much a downtrend. So very interesting structure. You can see this slow grinding action, and then we got the big acceleration off of the Liberation Day announcements. Huge sells to very low levels. Definitely a buying opportunity. We've gotten the bounce. We're back to the trend here now and still hesitating at that level, right? We've been at it for 2 weeks. Tried to break through. The next week we got that break back below it, testing it. If this starts to sell from here, that is definitely not what you want to see if you're trading to the bull side. So this is a clear zone of resistance. Want to see this accelerate off of this rejection. Want to see this rejection from here and then get a nice acceleration off would be interesting. And then if we could get a higher low setup somewhere around this kind of 18 to 19 area, that would be a great opportunity for a retracement. Moving over to the dollar was generally unchanged, down about 24 cents on the week. Through wick to these kind of lows, we're still well well below that 99.83 level. I thought we would get a bit of an acceleration here back down to this kind of 96 area. You can see the big breakdown, retest of the structure, breakdown from there. Didn't really get that continuation, so we're kind of locked in here on the dollar. No clear direction. I would say this is kind of a consolidation, looking for a bigger sell-off of that area, but just hasn't had any follow through after the big move down. Moving over to bonds. Bonds had a decent week, down 0.3% on J&K, still just cannot get above this 200, continues to be resistance here at 59, at 95, 96. And then looking at TLT, same kind of thesis, tried to go higher, finished down about $1, nothing crazy. Still think this is a low that we can trade off of. Did get a little bit of an acceleration back on momentum, back below that 85.90 level. You don't love to see that. Was hoping we would get a nice move off of this, break above that level, but for now we're back below it, so you would look for a move down to this 82.60 area if we did get that acceleration back to the downside. Either way, however, I do like this as an opportunity buying area. Anywhere below 85.90 I think is going to be a buy over the next couple months to couple years. And then moving over here to the VIX, just to re-highlight the thesis here, you can see we're expecting a push to this trend line. Probably going to happen Monday, probably going to get a touch of that, and then we would expect a bit of a bounce off of there. The momentum is basically zero, the RSI basically zero, but slightly bearish. Got the acceleration through this low here after the retest of this zone, looking for the touch there. And then the last time we did have a move like this where you got a big move up, big move down to the trend, the next move was absolutely massive, and that is the trend line touch that we're looking for once again. Moving over to my accounts, all I have on right now is some short calls on the NASDAQ. The NASDAQ seems like it's in a zone where we're going to see a little bit more rejection. The Mag 7 just cannot seem to find any legs. We had a couple of those stocks doing really well, and then you got Tesla doing terrible, Broadcom doing terrible towards the end of the week, starting to show some cracks in those rallies. So right now I'm looking for a little bit of selling early in the week, potentially through those next couple weeks like we saw on Seasonality. So right now, just bearish some calls, but I do want to get long on the Russell, so I'll probably look to sell some puts in there in my IRA. However, I did want to highlight that we are at that zone of resistance. We did have a really powerful push. I do think we're going to go higher ultimately, but a slight pullback and a slightly cheaper price would be nice. Let me know down in the comment section what you thought of the jobs data. Do you think it's a reacceleration on the JOLTS numbers, or is the services number a little bit more indicative of where the economy is headed? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.